Success comes down to choosing the pain of discipline over the ease of capitulation. Thibaut. Every time you skip the market review, you don't look at the market for the day, figure out what's going on, how your practice trades are going, or what practice trades are setting up, you are capitulating. You are giving up. You are missing out on the nuances, the things you need to know. 10 to 15 minutes a day, that's all we ask. Now, yesterday, I got on some kind of roll and into time warp and didn't realize how long I went, but thank you for your patience. I think those are great shows. There's so much information for me to share with you, and I'll get on those rolls. The feedback I get is that you like it. So occasionally that happens. 10 to 15 minutes, though, is what I strive for, and I think I covered our 4 charts in that time period. You've asked me to add 3 more. That is gold, Bitcoin, and real estate. I've done that, so that's a little bit of extra there. But let's go ahead and jump into these charts. I'm going to tell you a little more about the Accelerated Market Mastery course that's coming up in a couple minutes, but let's look at what's happening. S&P 500 down 0.7% today. The Qs, Nasdaq 100 up 0.72%. We see bonds up. It's been a while, but we still see that things are trudging down on them, but up 1.14%. And gold up, not quite a percent, 0.96. 2 days of up movement in gold after the weekly vertical crossover. We'll talk about what that means, and then we'll get into Bitcoin, we'll get into real estate, and we'll get into oil. Okay, let's jump first into the S&P 500. Check out what our Heikin Ashi average pace candlesticks show. Up movement 2 days into the 5-day candle, price above the 4-day, the 4-hour 2-day, and the weekly chart. Price percent oscillator heading up, derivative oscillator gaining upward momentum. Go to the 2-day. What do we see there? And I hope you're paying attention how I always evaluate these things. The order I do things, the priority I give. I mean, it's all extremely important. And if you go through your trade worksheet, your daily market worksheet, and your weekly worksheet, all those PDFs are available for free in the show notes. If you're not a subscriber, go to chartingwealth.com, sign up for free. You'll get all that information emailed to you every day, plus the special trainings. We have a great training for you today. That training is dollar cost averaging, problems and our solution. I hate dollar cost averaging. Why? Because if you can read a stock chart, why let your trade go down? Why sit there and let it get hammered? Now, there might be a good reason. I talked about that in some show notes yesterday to someone who was speaking about covered calls, something we teach in Accelerated Market Mastery, about using covered calls to help you buy puts for insurance. When you would do that, and the person was like, well, I don't ever want to do that in a rising market or a trending market. And I was like, well, no, of course not. You never would. That's not what that's for. That's for a weekly vertical crossover going down. If you have a reason you have to stay in a stock, maybe you're waiting for a dividend. Maybe you have pumped that. You've used a technique that we teach, a printing press type technique, where as the stock moves up and down, you reduce your basis in it time after time after time until you've driven your basis to zero. Do you know when you sell that stock? Never. Never. You never sell something you have no basis in. You're a fool to do that. You can keep pumping it back and forth. So again, there are reasons to use covered calls. There are reasons to use puts to insure. We teach all of that. We want you to practice, trade that, learn how to do it. That's how you become a charting master, a master of the market. And Accelerated Market Mastery is all about that. If you're interested in learning those things, that's what the in-depth 3-month program is all about. So we look at the S&P 500. We see it popping up in the morning on, well, I'm sorry, let's first go to the 2-day where we see things. Now remember that last 2-day chart finished drawing on Monday. So this is the first day of the latest 2-day candle. We see things sort of losing a little bit of momentum on the price percent oscillator, not heading up at the same angle. Derivative oscillator still gaining momentum, but we can see so far we're not hitting a higher high than we did on that prior move. The nice thing is price is above the 2-day and is above the weekly and is above the 4-hour Now we go from the 2-day to the 4-hour. This is where we see that topping. We could see it when we looked at the 4-hour chart. We can see it a little better here on we saw it on the 2-day. We can see it a little better on the 4-hour. We see a doji in the morning, a little bit of a rise in the afternoon, not hitting the highs we hit on Monday afternoon. Look at consequently, price percent oscillators moving down. Derivative oscillator topped Monday afternoon and has dropped energy. What does that mean to us? It just means we'll watch and see. Is the market topping off? Well, S&P 500 down for the day 0.75%, as we said. That's where we see things losing that momentum. We'll just watch, see what there is to see. We've had a great run of it. If we have to pull this trade sometime soon, look at how great it has been. Jumping in points somewhere around the 286 mark and a high of 323.41. Beautiful, just beautiful. Okay, let's leave the S&P 500, go to the Nasdaq 100, up 0.72% for the day. Look at those stair steps running up. Now again, S&P down, Nasdaq 100 up. We see the price percent oscillator spiking up, derivative oscillators flat. That's interesting. We'll see the reason for that as we move on through this. That is curious. But again, an up candle forming for the week. We go to the 2-day chart and we see again, first day of this latest 2-day candle, nice up move, well above the 2-day, well above the weekly. Price percent oscillator moving up, derivative oscillator gaining upward momentum. That looks nice. 4-hour. We see a bit of a slowdown in the morning on Monday, and then of course gathering speed and moving up. Just don't see the reason right now for the slowdown in the weekly on the derivative oscillator. Can't figure that one out just yet. I'll keep that in the back of my mind as we proceed further in the week, but up in the morning, further up in the afternoon. Again, while the S&P was stalling, Nasdaq 100 was continuing to move up. See a little bit of a slowdown in the up movement on the price percent oscillator, but that derivative oscillator just continuing to gain momentum since it dropped and then started gaining back on the 4th afternoon on the 4th of June. That was last Thursday. So again, things looking nice. It is interesting to see the S&P down about the same percentage that the Nasdaq 100 was up. We'll continue to monitor that and watch it. But again, has this not been a beautiful trade? Started a week earlier than the S&P 500 at around the 215 mark, as high as 244.18. Wow, that is just beautiful. And 1, 2, 3, 4, 5, going into a 6th, 2 days into a 6th week. That is just beautiful. Just beautiful. That's the magic of the weekly vertical crossover. That is our main trend following technique. Makes getting in easy. Getting out is where you've got to have that mastery. Okay, let's keep moving through these charts. We had a weekly vertical crossover going down back on the 27th of May on bonds. Bonds were down the next week, really spiking down the following week, ending the 5th of June. So far this week, we have a down candle drawing, but look at that. We're not hitting a lower low. We talked about that yesterday. Consequently, bonds were up for the day 1.14%. Price is below that weekly trend line, and we see the price percent oscillator losing some of that downward angle. Still heading down, though. Nice down angle pushing through the 50-period moving average line. Derivative oscillator gaining downward momentum. Let's look at that 2-day chart. We can see again a loss of some of that downward angle. Price percent oscillator still going down though. Derivative oscillator gaining downward momentum. First day of this latest 2-day candle, and look at it. A green up candle. Haven't seen that in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 2 weeks of movement. And we see things pairing off there. Pay attention to that if you have been in this down move on TLT. Now, what do you pay close attention to? Well, where the price percent oscillator is on the 2-day chart, where the price percent oscillator is and how strong it's going down on the weekly chart. This green open box candle is the first day. It's not done yet. And look at what's happened in the past. Gone down, sort of popped up, gone down, popped up, gone down. So again, there are times when stocks, ETFs move down, sort of digest those losses, or the opposite, gains, and then they move in the same direction, digest, and then move in the same direction again. So, patience, paying attention particularly to that 2-day and weekly is extremely important. Now we leave the 2-day, again, just the first day of the latest 2-day, and we see where things bottomed on Friday morning. And then we had a slowdown in the down movement Friday afternoon, a doji, lots of indecision on Monday, and that's where the up movement started Monday afternoon. Now, this is some good news Tuesday morning, and then a slowdown in the up movement Tuesday afternoon. We did have a crossover on the 4-hour chart going up, and the derivative oscillator went positive, pushed through, of course, on Monday afternoon, pushed through the 4-hour trend line. So pay attention to that. Price is still below the 2-day and the weekly. Those are important barriers also. We start crossing those in that 4-hour chart. Not that big a deal, but if we start crossing the 2-day and the weekly trend lines, those immediately become big deals. Same with that 2-day chart. If it started losing downward momentum or crossed over going up, big alarm bell. Again, you learn this stuff by practice trading it. You don't learn it just from hearing my voice. That is, again, why we push over and over and over again how important it is for you to practice trade. If you have stocks, ETFs you were fascinated by and interested in, you should be looking at those every day the same way we look at what we look at. Practice trade them. Again, we had a great training yesterday for our subscribers. You do that for free in the show notes. You'll see it every day. Go to chartingwealth.com, sign up. What were we talking about? Backtracking. We're talking about looking back and seeing how accurate the charts are for the ETF or stock you're interested in. If the charts work, use them. Charts don't work with all stocks, all ETFs. They just don't. Some don't move well. Some move really, really slow and crappy and haphazardly. Those you stay away from, but the large majority of them are potentially trackable. Now we go to GLD. Now, we had the weekly vertical crossover this last week, still in effect, although it ain't so hot right now. We see that we reached a lower low in the prior week. We haven't hit that this week. We see that the price percent oscillator is still heading down, derivative oscillator still negative, but we had an up day again in gold, up about 8%, 0.96%. So again, that's not beautiful, but we do have a red down candle. We have a little wick on top, a longer wick on the bottom. Again, we're watching very closely. None of our weekly vertical crossovers have failed this year. Doesn't mean we won't have one that will. We go to the 2-day chart. We see the price percent oscillator still heading down, hasn't pushed through the 200 period moving average line. If it does that, that's a good sign. Derivative oscillator still gaining downward momentum. Price percent oscillator still heading down. But we have a green open box candle forming. Now, we've seen this happen before. We saw it happen after a down move back on the 27th on the 2-day chart. Popped up for 4 days and then 2 huge down moves. So keep your eye on the price. Pay attention to that weekly and 2-day chart. See how things happen on Wednesday, Thursday, and Friday. And again, if we start having considerable weakening of the 2-day, then we're going to pay very, very close attention to that. Be very concerned about that if indeed that occurs. So we leave the 2-day, go to the 4-hour. Up in the morning, good news is slow down in the up movement in the afternoon. Things did cross over in the afternoon going up on the price percent oscillator, and the derivative oscillator went positive. So we'll pay attention. See what there is to see there, what there is to learn. Are we getting a ceiling somewhere around the 50 period moving average? Don't know. We'll know more on Wednesday. That's where we are as far as gold goes. Folks, those are our 4 big charts. If that's what you're interested in, you're done for the day. If you're interested in more Bitcoin real estate and black gold, that is oil. We've got that coming up for you. Accelerated Market Mastery. I am spending a large part of my day tomorrow calling all of the people who are interested in taking the training. Not everyone gets in. We do have limited space. And if you are interested, please email us, cw@chartingwealth.com. There's a link in the show notes as to what Accelerated Market Mastery is all about. It's 3 months worth of intensive training, first on charting, second on options, third on creating your own virtual personal wealth fund that you will set up, learn to manage, learn to practice trade in, and all you need to know about how to do that. We want you to practice all of these things and learn how to do it, how to use things like I talked earlier, covered calls, how to use puts to insure, how to pick out stocks, ETFs that you are interested in that you can begin practice trading, filling up your virtual personal wealth fund, learning how to use options to accelerate not only the wealth that you're building in those virtual accounts and in that virtual fund, but also how to insure through downturns, things of those natures. Again, how to keep liquid, which is the number one thing going forward. If you think this market's going to go up forever, you are sorely mistaken. We are going to see some bad times coming ahead, and you need to be ready. And if you're not ready, well, you're going to be in trouble. And we want to educate you. That course is available. Please go ahead, check out the videos that are linked in today's email or in the show notes. If you're listening on iTunes, you can find them there also. And if you're interested, this is a limited time to sign up for the course. It is going to be 3 months of training, then 3 months of follow-up where we have question and answer sessions. Make sure that you've learned what you need to learn, that you're practicing, and it's just going to be loads of fun. I've taught this in the past. I can't tell you when I'm going to do it again. So again, sign up or miss it for however long it is. And again, if you can't afford it, it means you're not ready. But if you are ready, then let's hear from you. I'll talk to you personally. We'll find out if it's right for you. And if it is, we'll get you in it. Okay, let's move on. What do we see going on with Bitcoin? Up 0.39% for the day. Look at that weekly chart. Price percent oscillator still moving up. Derivative oscillator losing a little bit of momentum, and we're not hitting a higher high yet. I mean, the high we hit, 9,978.93, so that's really 9,979. We've hit a high of 9,721, so still waiting to hit higher highs. But that price percent oscillator is continuing to move up. Good sign. Today, really a sideways slide underway, and we see how things are just devolving. The derivative oscillator is losing momentum. Price percent oscillator is losing momentum, heading toward a crossover going down. So again, we've really just had a sideways slide for a long, long time. We'll see how that continues to develop. That 4-hour chart did cross over going down. It's really just sliding sideways. We had that crossover going up, and again, we've still, if you jumped into that play, it's done all right for you so far. Just continue to pay attention. If things start really blowing off steam, you don't want to lose the gains that you have had in that practice trade, but just continue to watch. Maybe all it's doing is digesting those gains and getting ready to pop up again. But again, pay attention in particular to the 2-day and the weekly. Let them guide you. Those are the bigger charts, and they're the ones you really want to follow. Just worried about that 2-day losing momentum and crossing over going down on you. What about real estate? Well, we see that we had a weekly vertical crossover back on the 29th. Nice week this past week ending the 5th of June. So far this week, 86.80 is the high. 86.07 was the high last week. So we've reached a higher high. We have a nice big candle, although real estate was down a little bit, 1.66% for the day on Tuesday. Derivative oscillator losing momentum. Gaining momentum, continuing to gain momentum. Price percent oscillator heading up. That's good to see. That's the weekly. 2-day, pretty much the same thing. Now we do see a red open box candle. That is a slowdown in the up movement. So again, that's what's causing the price percent oscillator to lose a little bit of its upward motion. We look at the 4-hour, and that's where we see where the topping has occurred. Down in the morning, not much of a recovery in the afternoon, down 1.66% for the day. So pay attention. Let's just continue to see. Hopefully this is going to be digested, and you'll see, again, real estate start its up move again. Now, I'm not going to the trouble of drawing my trend lines on these charts. These are sort of the extras that I do. If you are charting real estate, Bitcoin, and oil, you need to be drawing those trend lines. That is the weekly and the 2-day, and occasionally the 4-hour if you think it will be helpful. We do notice that on that 4-hour chart, the derivative oscillator's already gone negative. So again, those things are helpful for you. You should do that on all the charts that you are practice trading. Now we're going to leave real estate, going to go to black gold. That is oil, up 0.18% for the day. Now we seem to be going into a 4th week of a small green up candle. So far, derivative oscillator went positive back on the week ending the 5th of June. Still waiting for a weekly vertical crossover to occur. It's been a long time since you had a weekly vertical crossover going up, and oil was a bit slippery back in the day, just sort of laminated. But man, when that crossover started going down on the 31st week ending the 31st of January, it hammered down. I mean, the high in oil was around 106.56, all the way down to a low of $16.88. Bam! I would not have wanted to been in that nightmare. But we'll see if it's going to gain momentum and start moving up again. If you have that weekly vertical crossover in the future, something you really might want to practice trade if you're interested in gold. We saw the 2-day crossover back on the 19th, sort of lackluster. It slid sideways for a while, went up, and this latest 2-day candle shows a real slowdown. That red open box candle, price percent oscillator nonetheless is going up. Derivative oscillator, which had been flat for many, many days, lost some momentum. We'll see how this 2-day candle finishes drawing on Wednesday, the close of the day. And here on the 4-hour chart, you can see where things topped on Friday and really been sliding sideways and down since then. Crossed over, going down on that 4-hour chart at the end of the day. Price percent oscillator did. Derivative oscillator still a little bit positive. That's where we are, folks, as we shake things down on a Tuesday. What are we waiting for? Hopefully for gold to continue its descent. Same with 20-year bonds. Hopefully they will start their descent further, hit a lower low than they did last week. Nice to see the Qs still moving in the right direction up. Not really frustrating, just a down day on the S&P 500, but we will pay close attention to that. Our weekly vertical crossovers are still in effect, going down on gold and 20-year bonds, up on the S&P 500 and the Nasdaq 100. Don't you love this? I love this. I really, really love it. And I would love it for all of you who are interested to sign up for. You're going to love the Accelerated Market Mastery course. Everybody who's taken it has loved it. And you will get such a kick and a thrill out of learning all the nuances, all the secret things, all the hacks, and the stuff that just makes you say, wow, I love the market. Okay, friends, all the best. God bless from the whole team at Charting Wealth World Headquarters.